This is one of those tax changes that most people will completely miss until the money is already gone. When you finally realize what happened, it will be too late to fix it. Welcome back to Tax Hack Pro. Subscribe it. Today, we are dealing with an emergency update for your wallet. If you earn tips, if you grind out overtime hours, or if any part of your paycheck depends on premium pay or gratuities, 2025 is not just another year. It is a transition year. It is a minefield. And what you do right now, literally starting today, determines whether you hand the IRS thousands of dollars you didn't have to, or whether you keep that money for your family. For the first time in United States history, federal tax law has cracked open a door that was previously welded shut. Workers are now allowed to deduct qualified tip income and qualified overtime premium pay directly from their taxable income. Let me be crystal clear. This is not a tax credit. This is not a delay. This is a hard deduction that lowers the baseline number the IRS uses to tax you. But here is the terrifying part. Most workers have absolutely no idea this exists. And honestly, it's not your fault. The rules changed faster than the paperwork could catch up. Your employer is likely not ready for this. The IRS forms are not fully updated to reflect this. And the entire responsibility to document this, to fight for this deduction, falls 100% on your shoulders. In this deep dive video, I'm going to walk you through exactly what changed under the new One Big Beautiful Bill Act. I'm going to explain who qualifies, how to calculate the math so you don't get audited, and why failing to act during 2025 could cost you a fortune when you file in 2026. This isn't speculation. This isn't a rumor. These rules are law, and they apply to the money you are earning right now. Let's start with the context, because you have to understand the before to appreciate the now. For decades, the IRS treated your tips and your overtime just like any other dollar. It didn't matter that you had to miss your kid's soccer game to work that double shift. It didn't matter that you had to smile through a rude customer to earn that $20 tip. The IRS viewed that money exactly the same as a CEO's salary. Every dollar was fully taxable. That has fundamentally shifted. Congress created a new category of deductions specifically for the grinders, the people whose income fluctuates and comes from effort beyond the standard 9-5. The goal was to reduce the tax burden on the service industry and essential workers. But there is a massive catch. This deduction is not automatic. There is no box on your paycheck this year that is going to magically apply this for you. In 2025, the W-2 forms and the payroll software systems are essentially operating on the old software of reality. They do not clearly separate deductible income from non-deductible income. That means the IRS operates on a simple principle. If you can't prove it, it didn't happen. Let's break down the two main pillars of this change, tips and overtime. First, let's talk about tips. If you work in hospitality, this is your lifeline. But the IRS is very specific about the word qualified. Not every dollar you receive is a qualified tip. These must be voluntary payments made by customers. This applies to servers, bartenders, baristas, delivery drivers, chauffeurs, and estheticians. If you work in an occupation that customarily and regularly receives tips, you are in the game. But you have to know the difference between a service charge and a tip, because if you try to deduct service charges, you are waving a red flag at the IRS audit system. Now, let's move to the second pillar, overtime. This is where the math gets a little tricky, and where I see most people getting confused. The law allows you to deduct the premium portion of your pay, not the base wage. Let's do some napkin math. Let's say your base pay is $20 an hour. When you hit overtime, you get paid time and a half, which is $30 an hour. Many people hear overtime is tax deductible, and they think the full $30 is tax-free. That is wrong. That is dangerous thinking. The premium is only the extra part, the half in time and a half. So, in that $30 hour, your base pay of $20 is still fully taxable, just like a normal hour. It is only the extra $10, the premium bump, that qualifies for this new deduction. Why does this matter? Because most people do not track this breakdown. They just look at their pay stub, see overtime pay, $500, and move on. But in 2025, you need to know exactly how much of that $500 was base pay and how much was premium pay. If you can't separate those numbers, the IRS may deny the entire deduction. The burden of proof is on the taxpayer. That phrase should scare you into being organized. The IRS does not reward good intentions. It rewards documentation. Now, let's talk about the limits, because this isn't an unlimited buffet. There are caps on how much you can deduct. For single filers, the maximum combined deduction for tips and overtime reaches up to $12,500. Let that sink in. That is $12,500 of income that you earned, that is in your pocket, that the federal government basically ignores for tax purposes. That could shift you into a lower tax bracket. That could result in a refund that is thousands of dollars higher than you expected. For married couples filing jointly, that number doubles. It reaches up to $25,000. That is a life-changing amount of tax protection for working families. However, we have to look at the ceiling. There are income limits. This was designed for the middle class and working class, not the ultra-wealthy. Once your modified adjusted gross income, MAGI, crosses certain thresholds, the deduction begins to phase out. For single filers, if you make up to $150,000, you are generally good for the full deduction. For joint filers, that number is $300,000. Above those limits, the benefit starts to shrink and eventually disappears. This brings us to the transition year problem. Why is 2025 so dangerous? Because right now, we are in a gap period. The law has passed. The benefit is active, but the bureaucracy is slow. Employers are not required to report this breakdown on W-2s, yet in the way the IRS needs for the deduction. Imagine getting to April 2026. You sit down to file your taxes. You heard about this Tax Hack Pro video. You know you qualify. You look at your W-2. It just shows one big number for wages, tips, and other comp. It doesn't break out the overtime premium. It lumps service charges and tips together. If you didn't keep your own records during 2025, you are stuck. You cannot guess. You cannot estimate. If you guess and you get audited, you lose. You effectively have to be your own payroll department this year. So what does a Tax Hack Pro do? What is the strategy? Number 1, you track your tips daily. I don't mean a rough guess at the end of the week. I mean every shift. Keep a log. There are apps for this, or a simple spreadsheet works. Date, shift hours, total cash tips, total credit card tips. Separate the voluntary tips from any automatic charges. Take a picture of your checkout slip at the end of the night if you have to. Number 2, document your overtime. Every single pay stub you get in 2025, save it. Do not throw them away. Do not rely on being able to download them later from a portal that might change passwords or crash. Download the PDF every pay period. Look at the overtime line. Calculate the premium yourself. Write it down in a ledger. Pay period ending March 15th, 10 hours overtime. Premium pay portion, $150. Number 3, understand that you are the advocate. When you go to your tax preparer in 2026, or when you use tax software, you are going to need these numbers ready. You are going to have to manually input this deduction based on your records. If you walk into a tax office with a shoebox of receipts and a vague idea, they aren't going to give you the deduction because they can't sign off on it legally. This is a massive shift in how we think about labor and taxes. For years, we have been told that W-2 earners have no deductions. Only business owners get write-offs, right? That was the conventional wisdom. This law breaks that rule. It gives W-2 employees a write-off for their labor. But unlike business owners who are used to keeping receipts, employees aren't used to this burden. Think about the scale of this. There are millions of workers in the U.S., servers, nurses, construction workers, truck drivers, who are in this exact boat. The government has put a pot of gold on the table, but they turned off the lights. You have to fumble around in the dark to find it. My job here at Tax Hack Pro is to hand you a flashlight. Let's address the skepticism. I know some of you are thinking, is this real? Is this a loophole that's going to get closed? This is not a loophole. A loophole is an accidental mistake in the law that people exploit. This was intentional. The One Big Beautiful Bill Act specifically carved this out. It is statutory law. It applies to tax years 2025 through 2028. That means we have a 4-year window where this opportunity exists. But 2025 is the hardest year because it's the first one. By 2027 or 2028, maybe the forms will be updated. Maybe ad and paychecks will do this for you. But right now, in the Wild West of 2025, the winners will be the ones who pay attention. Let's talk about the shadow tax. When you miss a deduction you are legally entitled to, you are paying a shadow tax. It's a penalty for ignorance. If you qualify for the full $12,500 deduction and you serve tables, and you fall into a 22% tax bracket, missing this deduction costs you $2,750 in actual cash. That's a vacation. That's a down payment on a car. That is money you earned, standing on your feet for 12 hours a day, that you are donating to the Treasury because you didn't keep a logbook. Do not let that happen. We also need to talk about the mechanics of filing. This deduction applies whether you itemize or take the standard deduction. This is huge. In the past, many tax breaks were only for people who itemized, usually people who owned homes with big mortgages. This deduction is an above-the-line adjustment or a specific income exclusion, depending on how the final IRS guidance lands for Form 1040. That means it is accessible to the renters, the young professionals, the people who take the standard deduction. It democratizes the tax break. But again, the IRS is a machine that runs on data. If your numbers look suspicious, their computers flag you. If you claim the maximum $12,500 deduction, but your job title is librarian, you're going to get flagged because librarians don't typically get overtime premiums or tips. But if your job title is bartender or ICU nurse, the computer expects it. However, if you get audited, the computer goes away and a human being asks for your logbook. If you hand them a blank stare, you owe that money back, plus interest, plus penalties. Documentation is your shield. I want to touch on the married filing jointly aspect again because $25,000 is a staggering number. If you and your spouse both work jobs with fluctuating income, maybe one of you is a firefighter working overtime and the other is a hair stylist earning tips, you can stack these benefits up to that $25,000 cap. That basically wipes out the tax liability on a significant portion of your household income. This is the kind of wealth-building tool that usually requires expensive accountants to find. But it's sitting right there in the open. Let's look at the timeline. We are currently in the tax year 2025. You cannot claim this on the return you file in early 2025, which is for 2024. Do not get confused. This is for the work you are doing right now. This is for the return you will file in April 2026. Why am I telling you this so early? Because you cannot go back in time. You cannot wake up in February 2026 and realize you should have been tracking your daily tips in June 2025. The memory fades. The receipts get thrown out. The digital access to pay stubs expires. You have to build the habit today. Get a notebook. Write Tax Hack 2025 on the cover. Put it in your car or your locker. Every shift, take 30 seconds to write it down. Worked 8 hours regular, 2 hours OT. OT premium approx $40. Tips $120. That little 30-second habit is worth thousands of dollars. It is the highest hourly wage you will earn all year. This is a transition year. Transition years are where fortunes are either protected or lost. The confusion is high. The guidance is trickling out. The employers are scrambling. In that chaos, the person who is organized wins. I want you to really think about the why behind this. The tax code is used to incentivize behavior. The government wants to reward work. By untaxing the extra effort, the overtime, the hustle for tips, they are theoretically trying to encourage labor. Whether you agree with the politics or not doesn't matter. What matters is the math. The math says you have a discount coupon for your taxes worth up to $25,000. Are you going to throw it in the trash or are you going to use it? Educate your preparer. When 2026 comes, don't assume your tax guy knows this. Show them your records. Tell them you want to claim the deduction under the new 2025 provisions. The IRS does not reward awareness. Knowing this video exists isn't enough. The IRS rewards preparation. Those who document correctly will benefit. Those who ignore the details will not. This deduction is a rare opportunity. It is a window of time where the working class gets a break usually reserved for the asset class. Don't let paperwork be the reason you miss out. We are going to be tracking this story all year long here at Tax Hack Pro. As the IRS releases new forms, we will do breakdown videos showing you exactly which box to check. As employers start updating their W-2s, we will show you what to look for. We are your partners in this. We are the watchdog for your wallet. If you found value in this deep dive, if you realized you were about to leave money on the table, do me a favor. Hit that subscribe button. Turn on the notification bell, because tax laws change fast and missing an update can be expensive. Also, share this video. Send it to your coworkers. Put it in the group chat for your shift. If you work in a restaurant, a hospital, a construction site, everyone you work with needs to know this. Don't let your friends overpay the IRS because they didn't know the rules changed. This is Tax Hack Pro. We don't just report the news. We help you hack the system to keep what is rightfully yours. Start your logbooks today. Stay organized. And I will see you in the next video with more strategies to secure your financial future.